at a certain level of wealth, the question is not real estate or Bitcoin.
We're on our fourth fund, about $300 million worth of real estate and $45 million, almost $50 million worth of Bitcoin.
It's how to position both to work for me without sacrificing liquidity, control, or long-term upside.
We merged the two together, and the real estate continues to buy Bitcoin every month out of the cash flow. We have best-in-class real estate with best-in-class money.
Today's topic is real estate versus Bitcoin. But we will look at it at a different angle. We will see how we can combine both assets in the best way. At the end of the video, you will know what advantages and disadvantage every asset group has got and how you can combine these two assets to achieve the ultimate wealth strategy. It's not about pitting assets against each other. It's about understanding their role and building a strategy that protects your wealth in any market cycle. So what if the edge is not picking one side, but combining the best of both worlds? If we compare these two assets, we clearly see that the return of Bitcoin within 1 year is around 64%. It went from 66,219 to about 108,000 at the moment. Also, over the latest 5 years, it went up 277.5%. That was from 28,000 to about 108,000. If you look at the other side, if you look at real estate, we see a steady growth of 6.3%. This is according to the Home Price Index 2023 to 2025. So real estate is stable, but stability without flexibility can quietly drain your capital. Bitcoin's volatility scares some investors, but for those with a vision, it's asymmetry with liquidity. What about the risk is not about price swings, but about not being able to move when the world changes. Let's compare risk versus accessibility. So in Bitcoin, we have a high volatility. It's about normal to have price swings of $1,500 per day. This is nothing unusual in Bitcoin. And the big advantage is that you can start with just $10. You send the $10 to exchange, you transfer the money to yourself, you experience how it is to manage a wallet yourself. Maybe you also set up a cold storage, a hardware wallet to figure out how everything works. And if you feel more and more confident, if you monitor the cycles and you believe in the asset, you can go more and more into it. This is a big advantage for Bitcoin, that you can start with $10. And it trades 24/7. This can be an advantage. Most of the time it's an advantage, but it can also be a disadvantage. If something horrible happens on the weekend, the Bitcoin market or the crypto markets are the only markets that are open. And if there is some war breaking out or something else happening, these markets get impacted first before the other markets open. If you look at real estate, we have stable prices and gradual changes. We don't have this up and downs, this really fast up and downs. The median home price in the US at the moment is around $417,000. So it's a little more difficult to start and to get into the asset because you need a loan or you have to have a certain amount of liquidity to go in. If you want to sell a house or buy a house, this can take you months or weeks, depending on the market situation, depending if there's buyers or sellers in the market. So this is basically a disadvantage, that you're not really liquid. You can't really move, sell, buy. In Bitcoin, it's 24/7. In real estate, you need to find a buyer who wants to pay what you want to have, right? Two more important factors are regulations and taxes. So let's have a look how we are doing there. For Bitcoin, we have evolving regulations. It's very positive at the moment, especially in the US. We have very positive developments. we have the ETF, we have all the big investment houses, banks moving into Bitcoin. Capital gains tax, depending on which country you're living, it could be that you need to pay capital gains tax. I've discussed this in one of my other videos. There are certain countries like Portugal and Germany. If you hold your crypto assets there for longer than a year and don't touch them, then they are actually tax-free. There's also other countries like the UAE and some other islands that you can actually cash out your crypto tax-free. So capital gains tax could be an issue if you live in a country where you have a high capital gains tax. And also there's no deductions. In real estate, there's a lot of deductions where you can reduce taxes, or you can use your collateral and put it into some new building and delay your taxation, or you even don't have to pay tax because you're getting write-offs. If you look at real estate, of course, we have a very stable framework because it's a very old industry and everything is regulated. You have tax deductions which help you to invest even more in real estate. So it's a very nice benefit of the real estate industry. And you also have the tax-deferred property swap. So you can sell a property and then buy something else, and then you can actually defer your taxation. So these are some benefits that you will have in real estate and you don't have in Bitcoin at the moment. But you don't have to choose between cash flow and compounding. The most successful investors, for example, Grant Cardone, what are they doing? They are pairing real estate income with monthly Bitcoin accumulation, building resilience and upside at the same time. It's not about either or, it's about integration. So one more time, I want to show you this comparison table to give you a better idea what are actually the advantages and disadvantages of every asset. So you can make a decision if this is the right plan for you. In Bitcoin, we have a store of value. Bitcoin as digital gold. Real estate, it's a shelter. It's your own property. You are protected and it is yours. Medium of exchange. Bitcoin for payments. You can use your Bitcoin to make payments. In the real estate side, you have income, rental property returns. You can generate rental property returns and have a monthly cash flow. Liquidity. Bitcoin is liquid 24/7. In the real estate market, it takes a lot of time to buy or sell. Transportability. With Bitcoin, you can transport, take your assets everywhere in the world because you just need your seed phrases. You can restore your seed phrases on any device. For real estate, you can't really transport your house, right? What about security? For Bitcoin, it's cryptographically protected. For real estate, it can be a little more challenging. You have to protect via an alarm system or via insurance or other things that you can protect against whatever will come. But this is much more complicated and much more expensive. Bitcoin you can break down in many satoshis. For real estate, it's a little more complicated, but you could add more. You could upgrade, basically. You could make a new bath. You could put in a swimming pool. You can renovate and bring up the value of the property in this way. You are already building something real. Now it's about protecting it without limits. Real estate can serve you very well, but Bitcoin offers something property can't. Global liquidity, digital custody, and next level sovereignty. So to make the right investment decisions, what factors are the most important factors for you to understand? First of all, you have high returns in Bitcoin. So the average return per year in Bitcoin over the last 5 years was actually 60%. The last year we had 64%. Real estate is stable, so it's a very good mix because you have a stable growth of 6.3%. For the liquidity, Bitcoin is perfect. You will always be liquid if you hold Bitcoin. And you can still benefit a lot from tax benefits if you combine your strategy with real estate. And just to show you how this plays out in the real world, here's a founder managing 300 million in real estate and 50 million in Bitcoin, combining both into one smart, self-reinforcing system.
I was on a space.
Yeah.
A live spaces, and the debate, they had me in it. I was the real estate guy, and the debate was real estate, Bitcoin, or stocks. And I'm like, guys, what about all three of them? Why not have them all? Like, we have figured out how to take our real estate. We're on our fourth fund, about $300 million worth of real estate, and $45 million, almost $50 million worth of Bitcoin. We merged the two together, and the real estate continues to buy Bitcoin every month out of the cash flow. We have best-in-class real estate with best-in-class money, Bitcoin. One's liquid, one's not. One has volatility, one has zero. Like, real estate is so boring. It has a zero volatility.
This is not theory. This is the future of wealth strategy. If you have built wealth, the next move is not guessing. It is strategy. Whether you're sitting on property gains, business cash flow, or liquid capital, now is the time to design a reserve that protects it, grows it, and gives you full control. At Strategy 7, we help founders, investors, and business owners build tailored Bitcoin reserve plans, integrated with custody, tax, and timing. Are you ready to protect what matters most? Click the link below or visit strategy7.io to book your complimentary confidential strategy call now. No pressure, no hype, just clarity and a smart plan built around you. I hope you enjoyed the video, and I see you in my next video. Take care. Bye-bye.